Welcome back, mates. Crypto Leverage Trading Group. A little bit after 12 on Wednesday. Obviously, many traders are feeling the pain of this morning. This is what happens. This is the third time it's happened. It will happen again. But the biggest thing that you need to concentrate on here is remaining calm and take advantage of the situation. We've seen this before, okay? Only this time it includes Ethereum. Last time, it's for the most part, it's always been Bitcoin. But because Ethereum has risen as far as Ethereum has gone, remember, Ethereum has risen from about $200 last March, right? Okay? So your COVID sell-off correction, again, and a year later, we're kind of feeling a little bit of the same thing, right? And we talked about this last week with what happened with Yearn Finance. And nobody was talking about a $15,000, $20,000 correction in Yearn Finance. Like it wasn't an issue for YouTube. And that's why we began to look at local tops in a lot of the altcoins in terms of setting hedges, setting short sell downs, setting straddles, being able to protect yourself from the onslaught. Okay. Well, now the onslaught's here. And it's been here now for the better part of 6 to 7 hours. All right. And so now you have to take advantage of it because, yesterday was yesterday. Tomorrow is tomorrow. And so what I'm doing in this video with Ethereum really quickly, because I think Ethereum will bounce back. I've said this in the post this today in the free trading community Discord. I encourage you to join that obviously your top market cap altcoins are going to recover the fastest. That's what's going to happen. Could be today, tomorrow, 3 days, or a week. They're going to recover. The larger cap are going to recover first, and then the rest of the altverse is going to follow. If again we see a complete reversal in the underlying dynamics of the market today, we're not entering a bear. We're not entering a bear market. Okay, that's me. Just say that right now. We're not entering a bear market. And so what do you do? So we're looking at Ethereum right now. We knew these things with the IO map. We knew these things. Ethereum had been overextended. We knew this. Okay. But it'd come down and bounce back. It'd come down and bounce back. And it's what's going to happen again. And we can see this. I'm on the 1 hour chart here. And I encourage you now, as you transition back to reversal, your 4 hours not going to help you now. Okay. Because it's been pretty much carnage. Okay. So you've got to get a couple 4 hour candles back into the mix. You've got to cycle back down to your 1 hour or less in terms of looking at RSI levels, looking at potential entry levels like we have this morning. As you can see here, we are already back in on leverage exchanges, in Ethereum, in Bitcoin, in Litecoin, in EOS, in XRP, correlated trading. They're all going to come back together. Now, some are going to come back faster than others, but they're all going to come back green together. And you could see that today. Simply just go down CoinGecko list, CoinMarketCap list, and look at the top 20 market cap coins and see the 1 hour. And look how correlated they all are, okay, behind Bitcoin. Remember, it's not Bitcoin dominance. That's BS, okay? It's Bitcoin driver. Bitcoin is the driver of this market up or down. Don't let anybody convince you any otherwise. There's no dominance anymore. It's a fallacy. It's debunked, okay? Again, this is the third or fourth time we've proven that's debunked. Why? All the altcoins crashed right with Bitcoin today. Okay, so what's it tell you? Like, they're all correlated, right? And so that's how you want to find the ones that are highly correlated. They're going to move in tandem with one another and cherry pick those at the bottom end, especially things like Litecoin under $200. That's a freaking steal. If Bitcoin goes back to 40,000 or 50,000, Litecoin's going back to 300, 350. That's just what's going to happen, okay? But here we're looking at Ethereum. We're going to open this up. I'm just going to show you really quickly where we are right now, 27.28. We were just under the 50-day moving average. So if we get back above the 50-day moving average, okay, or simple moving average, okay, what's really happened? Okay, we got down to tested the 100-day 247, fell through that, but it's on wicks. The 200-day 1544, we never got there. Okay, so we broke through the 50-day, basically challenged the 100-day simple moving average on some wicks here this morning. But again, if it's not a candle close, okay, if it's not a candle close, all right, below these averages, I don't pay